What if the investment almost everyone already owns is about to become even more powerful in 2026?
And it could make long-term investing even more attractive than before.
The answer isn't one stock. It's owning thousands at the same time.
But something important is changing behind the scenes.
Most investors think index funds are already the safest and smartest investment available. Diversification has always been one of the strongest forms of risk management. What exactly makes an index fund so powerful in the first place?
Let's break down exactly what's changing and why long-term investors should pay attention.
Before we explain why, let's start with one simple question.
And in 2026, several new trends are making that advantage even stronger. Instead of trying to beat the market, index funds simply become the market.
That means every successful company automatically becomes part of your investment. The biggest advantage of index funds has never been higher returns. It's consistency. No one company determines your entire financial future. That's one reason diversification continues to outperform concentration over long periods, because your portfolio already owns them all. You don't have to guess which company will become tomorrow's leader.
But 2026 isn't just about owning the market. It's about how the market itself is changing.
And successful index funds automatically adjust as those businesses expand.
That's exactly what makes index investing so resilient. Innovation is accelerating across multiple industries at the same time.
As new leaders emerge, index funds naturally evolve with the market.
That also helps many investors avoid emotional decisions. The portfolio evolves without requiring constant trading.
And gregestations. That's one of the biggest strengths of passive investing. Another reason index funds could become even more powerful is their incredibly low cost.
Because successful investing is often about staying invested. And index funds are designed to take full advantage of that long-term journey. Time has historically been one of an investor's greatest advantages.
Small annual fees may seem insignificant until decades pass. That creates a powerful compounding effect over many years. Every year your investments remain in the market creates another opportunity to grow.
Compounding rewards patience more than constant activity. That's why time often matters more than perfect timing.
Lower expenses leave more of your money invested and working for you.
Because long-term trends usually matter far more than short-term noise. Automation has made consistent investing easier than ever.
More investors are choosing simple long-term strategies over constant trading.
That's one reason long-term investors often focus less on daily market headlines.
There's another trend making index funds even more attractive in 2026. And that's another reason many investors believe index funds could become even more valuable in the years ahead.
You don't need perfect timing when you're consistently investing.
Regular investing naturally spreads your purchases across different market conditions. That's the power of consistency combined with compounding.
Small recurring investments can grow into substantial wealth over time.
Instead of predicting tomorrow, you're consistently preparing for the future. That helps reduce the pressure of trying to buy at the perfect moment. And that mindset may become one of the greatest investing advantages of 2026. You benefit from market evolution without constantly adjusting your portfolio. There's one more advantage that many investors underestimate. Diversification keeps improving over time.
And that broad diversification continues to be one of the strongest foundations of long-term investing.
The economy never stands still, and neither do broad market indexes.
That process happens automatically inside many broad market index funds.
That's one reason passive investing has attracted so much attention worldwide.
More investors often means greater liquidity and broader participation. That doesn't eliminate market risk, but it helps spread it across hundreds of businesses. And broad participation has historically helped strengthen market resilience.
Broad market indexes naturally reflect those long-term changes. And that broad diversification continues to be one of the strongest foundations of long-term investing.
Few investment strategies offer that level of automatic adaptation. Every year, new companies enter the public markets, while existing businesses continue to expand.
That's one reason passive investing continues to gain popularity. Another reason index funds may become even more powerful is the continued growth of the global economy. That means your investment evolves alongside the economy.
Discipline has consistently outperformed emotional decision-making over long periods. Investors increasingly value simplicity over unnecessary complexity. And that disciplined approach is exactly what broad market index funds are designed to support. Their greatest strength isn't trying to predict tomorrow.
Their strength comes from participating in long-term economic growth.
Here's something many people don't realize about index funds. For many investors, simplicity makes it easier to stay invested during uncertain markets.
And broad market index funds automatically reflect those changes.
As businesses innovate, successful companies naturally become a larger part of the market. That allows investors to benefit from change without constantly making decisions. Time and discipline often outperform constant prediction.
And that's exactly why many investors believe index funds could become even more powerful well beyond 2026. Staying invested has historically been one decentralized of the most powerful wealth-building habits. It means you don't have to predict the next winning company to build long-term wealth. So what does all of this mean for everyday investors? Owning a broad slice of the market allows innovation to work in your favor. That simple concept has helped millions of investors stay focused on the long term. As the economy grows, your investment grows with it. And that's a lesson that remains just as valuable in 2026 as ever before.
Small investments made consistently can become surprisingly powerful over decades.
Patience allows compounding to do the heavy lifting.
Successful investing often comes down to consistency rather than complexity. The investors who stay disciplined today may benefit the most from tomorrow's opportunities.
But there's one final reason index funds may become even more powerful in the years ahead.
Markets reward businesses that continue creating value over time.
Because long-term investing is built on patience, not constant reaction.
Broad market index funds naturally capture much of that long-term progress. That's a completely different mindset from trying to predict every market move. And that's something no short-term strategy can easily replace.
Instead of constantly chasing winners, you allow the market to evolve naturally. The future belongs to investors who stay patient while the market continues to evolve. The investors who stay focused on the long term often give themselves the greatest opportunity for future growth.
That's why many investors believe index funds may become even more valuable, not just in 2026, but for decades to come.
Patience gives compounding the time it needs to work. Consistency has historically been one of the strongest drivers of long-term wealth. That's why many long-term investors focus on staying invested instead of staying busy.
Markets will continue changing, but diversification allows your portfolio to change with them.
Simple strategies are often the easiest strategies to follow for decades.
That may be the greatest advantage index funds offer.
Not because they're exciting every day. Thanks for watching. If you enjoyed this breakdown, subscribe for more practical investing insights and long-term wealth strategies.